Welcome everybody to this live chat show with again our friend Justin Urquhart-Stewart, the well-known financial commentator, economist, guru, and call him whatever you like. There's no one that knows more about the business of the economy than Justin Urquhart-Stewart. Welcome also to our friends from the Challengers Business Club. Great pleasure to have you here today. I'm going to ask Justin some questions and then put your questions into the chat box. Justin, welcome. It's brilliant to have you with us again. Lot has happened since we were last talking back in May or June, and I'd like an update really on the British economy first. What's going on? What's all this about printing money? How are we ever going to pay it back? What's the Chancellor doing? What's the Prime Minister doing? And what about Brexit? Is that enough for you for the first few minutes?
Is that just one question then? Okay,
just
right.
One question,
well, Derek, first of all, thank you very much indeed for asking me back, and thank you everybody, and also for an incredibly flattering introduction. Of course, completely untrue, but thank you. I appreciate it. So, right. So since last time, what on earth has happened? Well, the good news is we're still here, and considering actually all the alternatives we've had over the past few months, we were discussing last time about what was going to be happening with COVID. Of course, nothing's new. There's the thought about the second wave. You start going into autumn. And of course, one of the key issues is that actually, we've got to reach the stage now where you've got to keep the economy going. And this is applying all over the place. And may I apologize in advance on the basis I have a Burmese cat that's very keen on appearing. So if it turns up very soft, I apologize. But what you've got is in various nations exactly the same issue occurring. Many of them went into lockdown, now experiencing a second wave. How do you manage that second wave? How do you keep the economy going? Particularly with that one word again, never forget the one word that runs any economy, which is confidence. And the confidence, we'll come on to America a bit later because of the issues happening there, but certainly in the United Kingdom, where we have had over the past 3 months some very serious questions now being raised about the leadership of the government. Boris, obviously not as physically strong as he was before, but also his aptitude towards it. He had hoped, having had a great Brexit victory in his view, that he was actually going to be able to sail through from there. But obviously what's happened with the pandemic has made life incredibly difficult. And it's easier for many of us to be wise after the event. But certainly he's now found himself in a position, and although they're having their virtual conference, what you are seeing is not necessarily a unified government or a unified party here. And so Musser from the gutter is certainly saying that there's a good chance he's not going to be leader by the time we get to the next election, which is a long way away. But in such a short period of time, he is not looking as strong as before. And the clarity of policy is certainly out there. And we've had more comments today from Richard Sunak, the Chancellor, which really are not giving us clear views as to what the future policy is going to be. Nice warm words about we're going to be able to pay down this debt, and without actually telling us how we're going to be doing it. Now, one of the questions you asked, I know it's something we've discussed before about money being printed. Of course, the joys of quantitative easing, I'm sure we're all familiar with. And of course, as a reserve currency, and sterling is still a reserve currency, albeit a much smaller one, we have the ability to do that. And you can do that while still people have confidence in the country, and that therefore we can carry on effectively printing money. Just to remind people, if you're not familiar with it, quantitative easing is merely the mechanism whereby the government can actually raise further money by producing government debt, which is then purchased through the Bank of England. The Bank of England technically being independent, which of course it's not, but that's another issue to do with Gordon Brown many years back. But it means effectively now that the largest holder of UK government debt is in fact the UK government. And so we've now got a figure of in excess of £18 billion a year in interest payments out of a total of around about 54 billion of total interest payments being paid by the government to the government. You couldn't make this up really, could you? But we're not alone in this. The Japanese government have taken it to extreme levels and have been buying not only the Japanese bond market, there barely is a Japanese bond market now, it's basically the Japanese government, and the Japanese are actually buying Japanese equities as well. And so this is all part of their support mechanism. The United Kingdom has not reached that stage. But by having quantitative easing, it has the ability to be able to produce more cash and to be able to do so, of course, at low rates, because interest rates, whether they're technically negative or not, of course, against inflation, they are negative. Whether they actually go to negative is a moot point, but they're effectively zero, so it's very low cost. The government debt office has been refinancing all the debt to make sure that actually it's now coming at these very low levels indeed. And frankly, it needs to, because with this level of debt, if you started seeing interest rates rising, that would be extremely painful for the government indeed. But there seems very little chance of that as far as you can see at the moment, but it's not impossible. So the money raising issue can still carry on, but there does come a stage when you stretch the credibility, and quantitative easing isn't a confidence trick, but it is a sort of trick of confidence. So as long as everyone goes along with it and doesn't actually think that the emperor is somewhat sartorially challenged, then money can be thrown at the system. The key issue here is, where does the growth come from? Now, fortunately, what the government is not focusing on is actually the next stage beyond this. Quite understandably, they're focusing on the element immediately in front of them, which is furlough comes to an end. We have a not so effective or understandable system coming after it to try and encourage further employment. But to keep people employed, either way, you're going to see unemployment go up very dramatically indeed. And that will certainly erode confidence, not from just those people who are unemployed, but people who just see those figures and just hold back in terms of investing and corporates making decisions. What we do need to do, and an area that I know that we've talked about before, Derek, is one of the areas of strength the United Kingdom has, as opposed to, say, parts of, say Germany. Germany is a great manufacturing country. The United Kingdom does not have that same size of manufacturing, albeit we're still the 8th largest manufacturer in the world, so not to be ignored. But technology and technology development is an area actually we have been very good at. And you can only really identify that with that moniker term, obviously silicon, as in Silicon Glen in the States. And we have that same term here with Silicon Beach in Brighton, Silicon Fen, Silicon Glen, Silicon Roundabout, Old Street Roundabout in the city, those familiar with. And the point I'm making here is that you get these sort of hotspots of tech businesses, and they tend to breed. And you can find these hotspots are the ones that are actually creating not just jobs, but actually creating new areas of development, which are very exciting. Now, these tend to develop where you've actually got the electronic infrastructure in place, high-speed internet and things like that. So rather perversely, you're even finding these developing in Cornwall, technically one of the poorest areas of Europe. Why? Well, because the EU put in ultra-high-speed internet into Cornwall. And so you're seeing places like Hale actually develop quite dramatically. Presumably this is why the Cornish voted to leave the EU. You couldn't make this up. Anyway, so those are some of the areas which are we should be focusing on and encouraging development. I don't mean government putting money into it at all, but encouraging more capital to be going into these areas. And so government should be taking some much more dramatic views in terms of taxation, not increased taxation, but really good tax incentives for longer term returns, longer term tax protection for entrepreneurs and longer term investors. And that means making sure there's some really very exciting capital gains tax benefits to be had to do that. And this is not a matter of, this is not the time for shilly-shallying around with little initiatives and giving people a little bit of extra ISA protection or something like that, or a little bit of pension adjustments. This is actually going to take some dynamic moves by the government to say, this is where we're going to drive the economy, this is how we're going to help doing it, and we need therefore private business to follow on from it, because there is no shortage of private money. But as we discussed before, there is a shortage in terms of some of the missing technology, the missing infrastructure to get the money from where it is now into those businesses. And remember, these are often smaller, growing businesses, and they're not necessarily in London. Mm. Does that answer any of those questions? I'm sure there's a whole lot I missed out. Hang on, I can pick my glasses up. I just dropped them.
We won't go to the questions yet. I think we should go to Brexit next. And take your view on Brexit. We'll all take a deep breath on how we're getting on with the negotiations in Brussels at the moment.
Yes, Brexit passed the Nurofen. Just when you think it's gone, it's back. We need a Brexit deal. Why? Because you need to have some idea of what happens next. At the moment, we have no idea what happens next. Now, again, back mutter from the gutter would seem to tell us that actually they're quite close to a deal. And the trouble is there are one or two emotional issues you have to try and deal with. UK fishing, for example. UK fishing economically is not important to the UK economy. Emotionally it is, because we all like pictures of Captain Birdseye and people sitting there saying with their packet of fishermen's friends and going off, and it's great stuff in Grimsby, although it does woof a lot. But actually, economically, it's not very important. What we do need to do is much, and I don't wish to necessarily cut off all the fishermen. We need to try and make sure there's a deal for them. Although I do find it rather perverse that actually the fish we tend to catch in our waters by our fishermen does not get eaten by the British. We export it to Europe. It's actually the fish that we buy tends mostly comes from Norway and Iceland, but that's another point. No, the deal we have to try and cut is one with regard to what happens to the Northern Irish border, because obviously that's the connected border with the rest of the EU. And two, making sure there's a free trade deal for most arrangements, and making sure as part of that, therefore, the free movement of flows of not just goods, but in due course capital as well, and particularly the goods, because you only have to look at Dover and things like that. And the slightest hold up of those lorries going through Dover means that you will end up with lorry parks in Kent and Calais, and they're already planning them, just in case that does happen. So that, I'm afraid, is a serious concern to me. One of the issues that is a worry, didn't get much coverage, is the EU turned around and said, actually, the cars that the UK is producing, and most of the cars are not manufactured, they're assembled. And so you've got Toyota, and you've got Nissan, and Nissan, particularly in Sunderland, said, we will invest further into Sunderland and not Barcelona, just so long as we can have the same tax deal as we had before going into Europe. Because remember, the Japanese said very clearly, we saw Britain as a gateway to Europe, not a destination. So if you change those and say, well, actually, you're not going to get the same deal, then Nissan have made it clear, then Barcelona will benefit, it won't be Sunderland. Now, the decision by the EU to say, actually, if you've got goods which are assembled in Britain, but partly made in Japan or elsewhere, therefore they are not British goods and they cannot be seen, therefore, as being tax-free. Now, that hasn't really surfaced too much at the moment, but that will cause a big issue if then Nissan do turn around and say, this is not the deal that we were told by Prime Minister May. This is not the deal we were told again by Prime Minister Johnson. And so therefore, well, we're not going to follow on because it's got to be worth our while. So we do need the deal. We've got to have it. If we don't, politicians will sit there and say, oh, it's the EU being difficult about it. Look, just practical elements. We need a trade deal in place so we can get the confidence to do more trade. And merely saying, actually, but we've got a free trade deal with Japan, so we can sell Wensleydale cheese into Japan. They don't eat cheese very much. It's not important to us. In fact, the free trade deal with Japan is of more benefit to Japan than it is to us. But it's a feather that the government likes to wave to say what they've achieved so far. So it is a serious concern. But it looks as though they're edging towards an agreement. But we're in the stage at the moment where if hopefully they go into a sort of lockdown period where they then go into the details, they don't have to talk to the outside world, and they come out at the end of it and say, right, and here's the deal, already done. If you can get into that tube, which lasts about 6 weeks, then there's a very good chance we'll have a deal, and I shall be greatly relieved.
Well, that sounds very important, getting a deal, as we all know. But are we going to give away our fishing rights, do you think? Now, I don't want you to speculate, but when we're trading concessions in negotiations, we are going to have to give something away, aren't we? Which is going to be...
The fishing issue is very strange. Can you remember about 12 years ago, actually, the EU gave fishing rights out by way of licenses, and these were given out to British shipping businesses as well as other areas, whereupon not all the British companies actually sold them to the Portuguese and the Spanish, which seems really rather odd, because then Britain's saying, but we want our shipping fisheries back, but you've already had the license and you sold it. It's not an easy issue to try and manage. I'm afraid part of the fishery industry, I'm afraid, will be let go in that form, because economically it's not that important, and politically, in terms of votes, it's not that important. But it is one of those emotional things that, of course, that all the media will latch onto. So if there's an area to be negotiated away partially, I suspect that's probably going to be it.
We've got a few technical questions in the chat box. I'll ask one or two simple ones to start off with before we get into interest rates. Did we have lorry parks in Kent before we were in the EU? Well, that was a long time ago, the EU. Only you and I, before we were in it, only you and I can remember that from our audience, I think.
Well, we always used to have this thing called Operation Stack, which is a nice way of saying car park. And basically that would have an endless line of lorries waiting to go in. And that was normally because a ferrier got stuck or the Calais dockers were on strike. something like that. But what it showed is very quickly, within a matter of hours, how this stack went from just a short line to a very long line. So yes, we've always had lorry parks, albeit not formally designated as such. But it's really and this is what I found so sad with the government, it took when Dominic Raab was actually looking at it, he was surprised at how much trade went through Dover. And he thought, really? You're surprised by this? Where have you been? Or have you ever had a job? And that's probably the issue. How many of them actually have had a job?
Yeah, well, we won't go there, Justin. John Timms is in Paris. He asks, what can we learn from the French economic situation with Macron and Castex, especially regarding how to do things rather than platitudes?
It's interesting. I was listening to them last night with, they've had some dreadful storm damage down in the Alpes-Maritimes, north of Nice. And you could see the politicians going down there coming out with the usual platitudes that the state will support you and provide everything. Actually, then what happens after that, it remains to be seen. The French are still much more interventionist. And as far as they're concerned, they will actually do what was necessary to keep the economy going. But of course, what they have to do is agree that with the rest of the EU, and particularly with Germany, to make sure that that support is going to be there. Now, the EU, or rather, sorry, the Commission have realised that this is a crisis for the whole area, and therefore much more flexibility is going to be needed. So the interventionist attitude of the French government, I think, will garner more support. But the French economy has got some significant issues to try and manage their way through. Their manufacturing areas have also been suffering very significantly. Their areas of technology are also pretty strong. Again, they've been fighting issues with regard to further investment and getting more international investment coming into them. They've been getting more as some of the financial service investment has been coming out of London, some going to Paris. Most of it actually tends to be going through to Frankfurt, Berlin, actually, and then also Amsterdam. But the French are gaining a little bit from it. So it's a different style of government, far more interventionist than the UK. But in terms of having the pandemic, but having the same sort of issues, it's interesting to see, as I mentioned to you a little bit earlier, how Paris is going into a heavier level of lockdown in the next 24 hours. And their issues of how to manage things like universities seem to be more organized than the mess we're having. And they're not trying to do it on such a localized basis. Regional, yes, but localized in sort of postcodes is really making it incredibly difficult to operate in the north of England. And certainly the elements with regard to the leisure industry of kicking people out at 10 o'clock to say, right, we're doing that because it's actually going to be better for controlling it, doesn't make a great deal of sense, because when you're in a pub, you're actually in a much more controlled atmosphere than when there's a large crowd of you outside trying to get into the off license to get a whole lot more booze. So I don't think they thought through this completely. And I think there's a lot more we can learn from how the rest of Europe are actually managing this.
Last question before we move on to America, and it's all about debt again, and our debt and the maturity profile of the debt. So if we write these instruments at low interest rates to pay for my breakfast and lunch on a Monday, Tuesday, and a Wednesday, how far out does the debt go? What's the maturity profile? And have they locked in interest rates at a quarter of a percent for the next 20 years or 50 years is the question.
Well, and certainly the answer is yes to that. They have been rewriting a lot of that debt down to lower levels. It was actually only about 5 years ago that we had the last of the First World War debt actually being refinanced. And it wasn't actually that long ago. You can actually go back to the old debt back to Waterloo. Because after the Napoleonic Wars, Britain found itself with a debt level of over 250% against GDP, which we're probably quite close to that now, actually. Yes, so the answer is they are refinancing the debt at much lower levels, locking it in, and then putting it out much further as well. You need to have shorter term elements, so you're going to make it more tradable, but there's quite a lot of undated debt in there as well. So they are restructuring as much as they possibly can. However, of course, a high proportion of this is going to be quantitative easing debt. And what will happen to that in due course is they will very politely write it off quietly. You don't want to say that into the market, because people then start getting nervous about the quality of UK debt. But remember, because this is debt and cash on both sides of the balance sheet, the government can actually net it off. And that will be done slowly over time. They've done that before, and I expect that to occur again.
I think we might need a lesson on economics about how that works next time we've got you on, Justin. So just to remind everybody, we've got our friend Tim Durkin from Texas on with us, who always comes on. And Justin, tell us your side of how you see America, Trump, and everything else going on there, because it's still the biggest economy in the world. I think it still beats the Chinese economy. Am I right there?
Yeah, it's still the largest economy in the world. Absolutely, the Chinese are catching up. And of course, one of the ways of actually measuring economies is actually looking at the value of the economy per head. So I haven't got the exact figures in front of me now, but next time I can certainly prepare those. It's not difficult to actually show the value. But the value per head of the American economy comes out at roughly $48,000 per head, which is really quite significant. You put that against the Chinese, and it's around about $3,000 a head, because they've got a huge population, and the economy is not as valuable. Interesting enough, I did some interesting calculations with Germany and the United Kingdom for that. Germany, of course, is a bigger economy, it's a bigger nation, and their overall value comes out per head at around about $36,000 a head. And for the United Kingdom, it comes out at just under $36,000 a head. That's for last year. So even so, the economy is larger. Actually, the per head value is around about the same. The French is slightly smaller than that overall. So the American economy, therefore, has obviously suffered a battering. Look at next year's perceived figures or forecasted figures. I look at the Bloomberg ones where they've been averaging out what the forecasts they've been getting. And they're looking at growth figures overall of about 4.4% for the globe, which is, I have to say, quite encouraging stuff. Now, a lot of that's going to be based on China, where they're looking at about 12% growth there. Always be careful of growth figures coming out of China. Nothing if not imaginative, not exactly totally reliable. But America returns to growth, and Europe should return to growth as well. But it will be very small, and it will be rather stuttering. Why? Well, it'll be because of what's happened with the pandemic, and because of that lack of confidence or damaged confidence. And the sooner, the greater their level of confidence can be rebuilt. And a lot of that will be down to unemployment, how you manage the unemployment, and how you get more investment going into those economies. And what you've seen in America, the development now of almost a record number of specialist investment vehicles coming to the market. And these SPAVs, and they're floating on the market. And you actually ask what they're there to do, and they're pretty vague. But basically, they're cash vehicles which are going to be going around buying up assets which are being either sold off cheap or may have gone bust or need to restructure or being sold off by larger corporations, and being able to refinance them and bring them back, not necessarily to market, but just bring them back into the economy. That's a good sign. It's a good sign because it shows A, there's money there, and B, people are actually willing to actually put that money in that direction. And the support they've had so far with these new issues has been very encouraging. So it shows investor confidence, and over that sort of level. That's almost beside politics overall. Now, the issue with politics, and I would part of Tim's greater knowledge of being his domestic area. But here you've got a possibility of a Biden government coming in, and a Biden government which is not really in a very good position to be able to start expanding growth a great deal. Why? Well, because the debt they've been building up. Yes, of course, the support package will have to be put through. Of course, it's been blocked at the moment because of the partisan attitude in Congress. But that will have to come through. But I suspect you're going to find the attitude towards corporate taxation and personal taxation is probably going to be more aggressive under the Democrats than you're going to find under the Republicans. Therefore, you will see a reaction from that probably in the markets. And the environment, which has been incredibly positive for companies over the past few years, may not look as positive as it would have been before. Why? There's one particular reason for this, is that America was, as we were as well, heading for a significant slowdown, potentially even 2 quarters of shrinking economy, i.e. a recession. It doesn't have to be very large. We were heading for that anyway before the pandemic. Effectively, what Trump was doing, he was overheating the economy, pushing it far, too fast. And he was saying, I'm growing it, making the most successful economy ever. Well, we can question that one. But the point is, actually it's going to make it more risky over the next few months or next few years, as some of this starts coming off and companies don't find it as comfortable as before, the run they've had over the past 3 or 4 years. So that's how I see it. It returns to growth. But there's going to have to be some economic reality starts coming back into this, and Wall Street will find this environment not as friendly as they probably found it before.
And what about Trump? Is he going to get elected again? Some of us think he might do.
You think back before, and it was always fascinating to me talking to my American business partner before, and I sort of said to him, well, would you be voting for Trump in the last election? And he said, no, absolutely not. I said, would you vote for Hillary? God, no, absolutely not. And I had misread completely how unpopular the Clintons were. And but I'm not American, so I wouldn't know that knowledge so much. Biden is, of course, does look incredibly old and slow. And so Sleepy Joe is the right sort of title. His number 2 actually is probably a downside more exciting. And I have to say that the vice presidential debate between Mike Pence and Kamala Harris, I think, is going to be much more interesting. There was a lovely headline the other day actually talking about the virus, but I thought it applied much better, which was Mike Pence hasn't got it. That's true. I don't think he's got it at all, let alone the virus, just anything really. It's just a rather vacuous space. So does Trump get through? Let's assume he doesn't. I mean, no one wishes anybody ill, but let's assume he does get through this. It would seem at the moment that he's way behind on the polls, but he's made it perfectly clear. It's not the voting on the day. It's all those mail-in votes, and those mail-in votes will take time to count. And all he has to do is make sure it doesn't necessarily go through to the Supreme Court, but all the state courts, and will hold it up and hold it up and hold it up. But that still means that come the end of January, you still have to have a new president. Now, I'm no expert on the Constitution, but I'm told that you still have to go through that process at the end of January. It's not a matter of just Trump sitting in the White House, I can carry on. But no doubt he'll be trying to challenge that. And how that works out, I'm afraid I just don't know at the moment. What's the effect of that? That, again, affects confidence, because people won't know which way the wind is blowing on this. And so political leadership is not a good position. A lack of political leadership is not a good position for an economy.
I'm just going to bring Tim in now. Tim, just for a couple of minutes, how are you seeing things out in Texas for us over here, the other side of the pond?
Well, to Justin's point, the debate was a debacle by any measure, and it was particularly harmful for Trump. There are several polls, and you got to be very careful with polls in the US, but there are several polls that say that Biden's lead has doubled. It's now between 12 and 14 points. Where Trump is losing it is with a very aggressive voting bloc, and those are suburban women. And they don't cotton, as we would say in Texas, they don't cotton to bullying and the behavior of the president. There is great concern, however, with Sleepy Joe. I don't think his elevator is going to the top floor anymore. I think it's going to be a case of Kamala has to do an outstanding job in the vice presidential debate, and she is very capable of doing that, because I think you nailed Pence in your description. We also have a tremendous problem with the economy and the debt, which there's not a lot of economic literacy anymore. We're not paying any attention to the cost of that debt. We are just trying to get stores open again, life back to normal, demask, and the priorities aren't necessarily where they should be. Outside of that, things look great. There will be a potential issue that has a lot of us very, very worried, and that is whatever happens on November 3rd, the aftermath has everyone worried, because it could get literally very violent. And something that I considered unthinkable 2 months ago when it was first put out now does seem like a possibility. And that is that if Trump loses, he will not leave the White House. He will play games about bad votes, false votes, which are a very real possibility with mail-in voting. Plus, neither the US Post Office nor the local governments have the ability to count votes manually. So it's going to be it's unimaginable. I just pray, because it's going to be very, very disruptive. And, you know, you don't want the United States to be very disruptive. It has a ripple effect around the world.
Thanks, Tim. We'll go back to Justin now, because I'm interested in the rest of the world, Justin, while we still got you on for a few minutes. China, Russia, and your cat.
And the cat. Well, I'm not going to start with Burma or Myanmar, because the Burmese can look after themselves at the moment, especially this lot. The rest of the world, whilst this is going on, the rest of the world is still growing. Yes, of course, the pandemic's hitting huge issues in terms of Brazil, in terms of India as well. But it's very easy to think, actually, that because Europe and America have had such troubles, the rest of the world is actually really slowing down and having a terrible time. There are some significant bad issues, but you're still seeing perfectly good strengths in Southeast Asia, and you're seeing development there. Sorry, cat out of the way. But where you are seeing significant impacts are those basic commodity countries who are suffering. We saw an oil price drop really quite dramatically last week further, and that's going to impact on those oil producers. And of course, actually, that's better still for those oil users in terms of still a key part of the economy, that extra cost, but also in terms of metal commodity prices, and that's going to impact on the likes of Australia. This week in Australia, we've actually got their budget coming up. And of course, the Australian economy has got a major problem. It's so dependent upon Chinese demand, and the Chinese are being very aggressive towards the Australians at the moment. Interesting to see that one of the Reuters journalists, who actually is Chinese, although of Australian citizenship, has been arrested for spying. Sorry, has been held for spying charges. So that just gives you an idea of the sensitivity at the moment, and it's very difficult for Australia to try and manage their way through it. So the rest of the world, longer term, needs the leading nations to be able to pull their way out. But don't think that they're stopping. And why are they not stopping? Because you're seeing, particularly in Southeast Asia, and you can see it in Africa as well, the rise of the consumer, the retail consumer. And certainly the rise of the Oriental consumer is still continuing apace. That's not going to be stopping, sorry. So that actually does encourage me. Now, a lot of that will also be related to what's happening with China, and we're expecting growth figures of about 12% on China. I still am concerned, though, with the increasing aggression you're seeing from the Chinese at the moment over some of their political issues, particularly in the South China Sea, the East China Sea, and also on the Indian border, both with Kashmir and also up in the northeast as well in Assam and Sikkim. So we have to be wary of that. So rest of the world overall, actually not as negative, I think, as some of the headlines have been showing.
And the Chinese are still buying up companies all over the world, football clubs and all sorts of things like that, are they?
Well, not just buying up the clubs. What they're doing is putting in, this has been a consistent tactic or strategy over the past few years, investing in infrastructure. That's to say, providing initially low-cost loans into these nations to be able to provide infrastructure, which of course is then actually built by Chinese companies. The cost of those loans are timed so that if there's a delay, the interest rates start going up. The countries themselves then can't afford those loans, and the assets then transfer to companies in China. A good example of that was the port in southeast corner of Sri Lanka, which is now owned by the port of Shanghai. And you're seeing now increased areas of, well, in Africa, it's been there for some time, but you're seeing an increasing level of investment now in the Caribbean, in some of the old British islands there, where you've actually seen Chinese investment going in. And so this is a standard way of doing it. Put the infrastructure in, provide the facilities, and then you're providing longer term linkage to and political linkage to China for further support. Some would say that's actually highly suspicious, a form of neocolonialism. Others would say it's a good way of actually using their money. I think I'm erring more to the former at the moment, because it's changed from what it was, say, 15 years ago. You're seeing a much more aggressive attitude coming through with the next wave of Chinese investments and the next wave of Chinese participants. I always remember in Uganda, the first ones were very good, not just speaking Swahili, they'd actually speak the local patois. The second generation went in and they could still speak Swahili. The third generation, no, these are Chinatowns. And by the way, no domestic people in those Chinatowns. So becoming much more isolationist within the country. So I'm very wary of that. But step back, in terms of the global economy, China will be growing, and with it, we'll be taking a lot of those regional nations with them as well.
And Russia?
Now, bear in mind, the Russian economy, Russia is not a superpower. Russia is a dangerous power. Remember, the value of the entire Russian economy is slightly less than 45% of the British economy, which always seems rather strange. You see the amount the Russians are spending on arms and such like, and yet we burst into tears anytime someone fires a missile. My God, that's £200,000. We've got to afford that. Mind you, we're just building two rather large aircraft carriers. No sign of any aircraft as yet. Well, that's not strictly true. They have actually found some, and which the Russians regard as very good targets. It's described to me as a very good way of being able to win one of the Pacific naval battles in the Second World War. Not for this next war, but anyway. So Russia finds itself economically in a very difficult position. Oil price low, minerals low, the level of population has been falling quite dramatically. Numbers falling, some falling off a cliff, some probably being pushed off a cliff, and still finding it really very difficult indeed. And bear in mind, Russia has a huge insecurity problem. It feels insecure. I remember my father showing me, and this was his career involved in some of this, was actually saying, here is a map of the world, now a map of Russia, turn it upside down, so that now you have, actually with Russia, you have the North Pole, as it were, behind you, and then go around the borders of Russia. And their view is one of complete insecurity. As far as they're concerned, everyone's nibbling away at them. And meanwhile, behind them, behind the North Pole, is a sucking great eagle, which they don't trust either. So it's a national insecurity, which you can see that run through their dictator in terms of Putin and how he's behaving. So economically, unimportant. Politically, yes, very important. But the economy, if the economy gets worse there, it creates more political ripples than economic ripples.
And finally, before we turn the recording off, Justin, you talked about gold being a good investment 3 months ago. What would you advise people to do now? Now, I know you can't give advice over here, and that would be the total wrong thing to do. But we did talk about Wirecard and some of those frauds. How do we make sure our money's safe these days?
Well, the trouble is, when you look around at the moment, where do you want to invest? Do you want to invest in government bonds, where you're almost, well, you are in some cases, having to pay for the privilege of holding those bonds? They're not paying you anything. So that sounds like a great deal. You could go to higher risk corporate bonds, but there's a reason why they're higher risk, because their corporates are higher risk. That's not going to make you sleep at night. Remember, equities will still be, even boring old UK equities will be giving you a dividend yield of 3.2%, which is higher than inflation, which is what, 1.25% to 1.5%. Your cash deposits are giving you 0 or 0.1%, which is pretty close to naught. And by the time you take off inflation, it's negative. So you're running out of things to try and invest in. So equities, and of course, the equity markets have done well on a very, very narrow basis, mostly technology. So you have to be really rather wary. Sorry, I'm suffering from the Burmese movement again. So equities must still be there. So you look around for other assets, and then gold is part of that. But I think I've bored you before with the fact, whilst gold is attractive, it has a value, but its value goes up and down. There is no yield. You can stroke it, lick it, cuddle it, but that's all you can do with it. So other assets, and that may be other alternative assets, but be wary. A lot of those alternative ones which get touted around at the moment, there's a big article today on investing in fine wines again. Be very careful. These are unregulated areas, and this is exactly the moment when people start coming up with really, really good schemes which turn out to be rubbish. Remember Bernie Madoff, perfect name. He made off with your money. He was so highly regarded in America, they made him the head of one of the American stock exchanges. The man was a crook. He ran a Ponzi scheme, which was huge, but no one questioned it. Why? If you want to run a good Ponzi scheme, you do it big in public, and no one questions you. No one actually questioned what was in his funds and in his portfolios. he would rant and rave and not tell you and just say, look at my past performance. This is exactly the moment when you're going to get other people coming out with things like this, not necessarily with Ponzi schemes like that, but alternative assets, other mechanisms. It's going to be a period of lower, slower growth. Remember, rule 1 of investing, very simple, don't lose the sodding stuff. Rule 2, we can try and find a way of growing it slowly over time.
Justin, that's fantastic. And I've always believed in rule 1 is you don't lose your money. You make sure it's there and you touch it, check it, and do whatever you can with it, but you probably don't hide it under the bed. Justin Urquhart-Stewart, thanks for joining me. Will you stay on for a little while to answer a few questions, and will you come back and join us in January when perhaps we can see what's actually happened in the world? And thanks very much for joining me, everybody. Please stay on, and please join us on a Monday afternoon. If you watch it on YouTube or my podcast, please like it. And thanks very much indeed. Have a great week.